Your Bitcoin is bleeding $1,000 every single month just sitting there in your wallet. Here's my Bitcoin. It made $82 yesterday, another $82 today. That is $2,500 this month while I slept. But here's what really hurts. Most Bitcoin holders have no idea that this is even possible, because while you're holding, waiting, hoping that Bitcoin goes to 200K, you're missing out on $30,000 per year in income that you could be collecting right now on every $100,000 of Bitcoin that you own. I'm going to show you the exact math that proves this, the 3 places this money is hiding, and why 95% of Bitcoin holders are getting robbed blind by exchanges like Coinbase, Kraken, and Crypto.com. Now look, I need to be brutally honest about what's happening to your Bitcoin right now. Let's say that you bought Bitcoin at 60K. Great, it went up to 100K, fantastic, you're up. But then it still sits at 100K for 3 months. During those 90 days, your Bitcoin made you exactly $0. My Bitcoin during those same 90 days made $7,380. Here's the thing, we both have Bitcoin exposure. We both benefit when Bitcoin goes up, but I'm getting paid while I wait. Now, most people think that crypto investing works something along these lines. You buy Bitcoin, you hold Bitcoin, and you hope that it goes up and sell it for profit. But that's like buying a rental property and leaving it empty. Sure, the property might appreciate, but you're missing out on $3,000 per month in rent while you wait. Therefore, the real question isn't when will Bitcoin go up? The real question is, why aren't you getting paid while you wait? So let me show you the exact numbers that are probably going to piss you off. $100,000 in Bitcoin just sitting in your wallet per day is generating you $0. Per month is generating you $0. And per year is generating you a whopping $0. Maybe you're doing some type of Bitcoin staking or lending. Congratulations, you're making a whopping 3%. That is $8 per day, $240 per month, or $3,000 per year. Now, watch this. $100,000 of Bitcoin in what I call working capital. Per day is $82 to $110. Per month is $2,500 to $3,300. And per year is $30,000 to $40,000. This is earning 40% per year on your Bitcoin on top of price appreciation. These are the same strategies that institutions are using. If you're holding 100K in Bitcoin, doing nothing for 5 years, you are leaving over $200,000 on the table. Once again, that assumes that Bitcoin does not appreciate. Every single month that passes is income that you will never recover. Now I want to talk about the 3 hidden places that this money is hiding. Place number 1 is trading fees. Right now, when people buy and sell Bitcoin, who makes money? Coinbase, Binance, Crypto.com, Kraken, the exchanges. They charge at least 2% every time that somebody trades. That's billions of dollars per year. And sure, you could subscribe to their pro plans, but you're just paying trading fees in advance with how high their costs actually are. But what if you could collect those fees instead? Well, in the primary markets, also known as DeFi, you become the exchange. You become the middleman. And when people want to trade Bitcoin, they trade with your Bitcoin. Now, first off, I know that might be a little scary, but hear me out. You charge them a small fee, about 0.25% or 25 basis points. It seems tiny, but when billions of dollars trade every single day, and there's only tens of millions of dollars and sometimes hundreds of millions of dollars of liquidity, that 0.25% turns into 40 to 60% per year. Place number 2 is lending income. Banks take your deposits and lend them out at 6%, and then they pay you 0.5%. They keep the difference. In DeFi, you are the bank. You can lend your Bitcoin, traders will borrow it, you collect the interest and earn 5 to 10% per year. The beautiful thing about this system is when traders borrow, these are collateralized loans, meaning there is not risk of default here. Place number 3 is yield compounding. This is where it's going to get really powerful. You take the income from trading fees and the income from lending and you reinvest it weekly. Not simply just claiming your earnings and putting it back in, but rather strategically creating a flywheel. Instead of getting paid once a year like a stock dividend, you're getting paid every single day. And that daily income compounds, turning 40% into 60% and sometimes even 80%. This is how people generate 40 to 60% annually per year in income while still having full Bitcoin exposure and exposure to the cryptocurrency market. Now look, before you jump in, we need to talk about what can go wrong. because I'm not going to sugarcoat this. I lost $30,000 in Terra Luna, another $10,000 in bad leverage trades, another $10,000 to stupid mistakes like liquidations, bridge exploits, and scam projects. That's $50,000 in total. That right there was my education. And again, if you're going to generate income on your Bitcoin and earn 40 to 60% per year, it's very clear that there are additional risks to it. It's really just a question of, are you willing to take those risks to generate income in the meantime? So here are the real risks. Number one is platform security. If the protocol gets hacked, you can lose funds. But platforms with billions in them, like Uniswap or Aave, have been battle tested for years. I mean, they have people trying to hack and exploit them probably on an hourly basis just because, once again, they have billions of dollars and they have never been exploited before. Risk number two is something called impermanent loss. Now, ignore the technical term and just hear me out for a second. If Bitcoin goes up, you can end up with fewer BTC and more stable coins. That's because people are buying your Bitcoin and giving you stable coins. Now, there's also ways to use this to your advantage. If Bitcoin goes down, you can end up with more BTC and fewer stable coins, meaning that you're accumulating and buying Bitcoin on the way down. That's why we diversify, and we really only put 30 to 40% of your Bitcoin to work in these types of positions. Never 100%, because we don't want to be left holding the bag when everybody has been buying Bitcoin. Risk number three is smart contract risk. Codes can have bugs. That's why we only use audited platforms with billions in TVL and years of history. Here's the truth. You're already taking a risk by holding Bitcoin. Right now, you're taking that risk for zero income, just to hope that maybe one day Bitcoin will go to your target price point. And even then, will you sell or will you hold all the way back down? At least with this approach right here, you're getting paid 40% a year to take the same risk. And of course, you're increasing your Bitcoin stash over time, therefore decreasing your risk over time. Now again, I'm going to back all of this up in just a second, but before I do, if you're new here, I ask that you subscribe if you're enjoying the content so far and turn on notifications so you don't miss out on more videos like this. This right here is my actual portfolio, $210,000. I have $72,000 in lending markets, I have $89,000 in liquidity pools, and I have $49,000 in stable strategies. Over the last 30 days, that is $11,000 in income roughly. There are real people in this industry with real portfolios, real returns, and obviously real money. Now, we've actually helped deploy over $50 million using this exact system in this ecosystem throughout our consulting firm and clientele. But here's where you're at. Every month that you wait is another $2,500 to $3,300 that you are not earning. Every day that passes, that is income that will never recover, and that is opportunity cost of not doing this. So look, I want to be honest though, this isn't for everyone. If you have less than $25,000 in your crypto portfolio, you should focus on building your portfolio first. If you have $25,000 to $500,000 or even more, and you're serious about turning your dead Bitcoin into working capital, and you have maybe 2 to 3 hours per week, I created a free 30-minute video on YouTube. It shows you the exact portfolio allocation that I use, how to avoid impermanent loss, the full flywheel system, and the exact platforms that I personally trust. The link is going to be at the top of the description. I'm also going to put it somewhere on screen right here. By the time you finish that training, your Bitcoin would have made another $0. Mine, on the other hand, probably made about $5, and that's just in 30 minutes. So the question is really simple. How much longer are you going to let your Bitcoin bleed? And I want you to drop a like if this opened your eyes, subscribe if you want more strategies like this, and I will see you guys in the next video.